Welcome back to Main Station. Well, as you might notice, I got a camera right now, so I better use it, and let's see if you like it. I think it's quite funny, but anyway, so let's get started. Today I will be talking about Google, Amazon, Tesla, and Apple, and regarding this camera, I'm not quite sure. I think I sometimes will look at the lens, but mostly, of course, I will look at my screen, so whatever. Yeah, so this is Google. As you might know, I'm not too fond of trading Google. Although we have actually a very nice range right now, which you're trading in. And yeah, we had this daily trend line and weekly trend line also, which we have now broken onto the upside quite nicely, and we are now finding a support at it again. If we go to 4 hour, then you can see a bit more clear. But anyway, if we go back to the daily, then you see we are still making lower highs and are falling off of these highs quite rapidly. Although regarding the S&P, this is also now in a sort of an equilibrium. And this break to the upside is regarding mostly the S&P 500 and the Dow Jones. But anyway, yeah, we have this 200-day moving average incoming. We have found quite nice support back in 2018 on it, and it has been resistance since later this year in October. Yeah, and you can see we have broken up above it very shortly, now twice. And if you want to say that history will repeat, well, then most likely we will see a drop again, although we are holding now on these moving averages on the daily, but we didn't last time. So this is a bit more different. Also, the move to the upside has been a bit more corrective in my opinion. You can see it like it curving, and I'm not sure how to use curves, or if they actually should be used. But you can see like this and also like this. So it's some sort of curving right now, and yeah, it doesn't look too appealing in my opinion. Also, this break is not too nice. So, well, it will mostly do what the S&P does. And if the S&P moves straight up, then Google will most likely too. But in any case, I think this is more bearish. And if we zoom out a little bit, then you can see maybe why. And this is regarding this possible head and shoulders. On a daily, it's not too nice since we haven't reached right back up. But even though the right shoulder on the usual head and shoulders pattern is usually a bit more small, or a bit smaller regarding its range to the upside, since the sentiment is more bearish. So, but what is important in my opinion is that actually on the monthly we have a very nice head and shoulders. You can see it right here. So I think that the monthly is to be looked at, and if we use this range right here of this pattern, it's like basically this range, then this is of course on the logarithmic chart. So price ranges are expanding if you use this to the downside. Then if you use the width of this pattern, then you would expect it to move right here maybe to 670, and this would coincide with support and resistance which we had in 2016, early 2016. And if you go back to the weekly, then you can see it has been quite significant support and resistance. So this would actually be very nice. It would be a 50% retracement from the top, and so from 1200 to 600, and this would be actually quite nice in my opinion. But this is of course very, very futuristic, and I will talk about this head and shoulders pattern again if we see if we are near to break it, or if we disregard it and actually move to the upside quite nicely in the future. But anyway, I think this looks more bearish than anything else on Google. Also, we had this big over a year bearish divergence on the RSI. You can see it right here. We have made lower highs, but actually we have made quite significant higher highs from like 900 to 1200. So about maybe 40% higher. Yeah, 30% higher from the initial high right here in the RSI. And so this has been bearish for quite a long time, and it's actually quite due for some sort of correction. And actually Google has never seen really a correction, a quite significant one, and of course never like 50%. So expect maybe here, not even back then. So Google has been actually a very, very steady uptrend, and it would be due for some sort of correction. And 50% isn't out of any imagination, in my opinion. So this would be very, very reasonable actually. But yeah, still quite futuristic. Also the ADX on the daily is not trending at all. Actually quite negative on this indicator, but you can see the traditional ADX is around like 5, so this is nothing. Usually above 20 it starts to trend, but below 20 it means actually a trend is not here. So yeah, this would also indicate that we will see some sort of trend change and most likely move in any direction quite soon. And since this looks like a head and shoulders, I would expect it to move to the downside. Yeah, well, that's been Google. And if you move to Amazon, then yeah, this is the hourly, and looking at the daily real quick. Yeah, we had this resistance line break to the upside, and we had a retest. The breaking was not too nice in my opinion. We had some sort of volume, so it has been okay, but not too happy about it. This descending channel is still quite significant, so I would say that we have broken it and it has been successful. So what I'm now looking at is this resistance zone right here around 1784. And you can see it has been quite important also in the past. So I would expect a retest of this area if we see more upside. But if you look at the hourly and the 4 hour, then we could, and this has been not too nice. So I will delete this right here. But we can look at an hourly head and shoulders pattern. The right shoulder though is now a bit higher than the left shoulder, and usually that you don't want this to happen, but this could still play out as a head and shoulders on the hourly. And of course, the smaller the time frame, the less significant it's in the long term. But I could see this actually move down this trend line again if the S&P looks bearish. So. But until then, I think most likely will be an equilibrium right now. If the S&P doesn't shoot to the sky, so yeah, I think most likely we will see equilibrium be playing out right here, a tightening range, and actually then yeah, we could see it break to the upside, break 1700, and then move to this line right here. So 1700 would be my next target. You can see it has been important in the past. So you want to look at this area, but after that, most likely we will see 1784 around 1780 to be our next resistance zone. And if you want to enter a trade, then I would only enter above 1715. You wouldn't have too much gains after that, but it will still be a nice 4 or 5%. So it's okay. But as you might know, we are quite extended now. Also on the daily, it's actually quite okay. And you can see on the RSI, we are also hitting important resistance and support. And the RSI can actually also be drawn very nicely with support and resistance. You can see right here in this area, and here. So still quite important. Yeah, and as I said, you can enter the trade above 1713, above this high, which coincides with some area of support and resistance right here. But I would be very cautious after 1780. So yeah, I think that's been it for Amazon. Nothing too special, but this descending channel has been broken right now, so quite nice actually. And if we move now to Tesla, and I think I'll make this video a bit quicker than my last video on these 4 or 5. Yeah, now on Tesla, this is interesting, and I've been talking about this, I think, also in my latest video on Tesla. As you know, we have this trading range, and in this area, moving averages aren't too important, since you also want to be looking at trending indicators when we actually have a trend, and this is definitely not a trend. This is consolidation for multiple years. So, but anyway, we had this bear flag on the daily and mostly in the hourly. So it has been very nice. We had this ascending channel in an ascending channel, and I've also been talking about this, I think. So I didn't trade it at all, sadly. But anyway, you can see we have this nice range right here, and usually you maybe want to say that, hey, we are near at the top of this channel line, so this would indicate this would indicate a break of this line, but it never does actually, or most likely it won't, and it didn't. It broke down, and it did quite significantly. I think we had like an 8% drop in the first day. Measured real quick. Yeah, 8%. So this has been quite significant, this breaking right here, and we had seen more downside from then. We are now seeing a bit more upside and a retrace to this area, and I expected it. I didn't enter a trade just because of this. I actually wanted to enter a bullish trade, but I got stopped out. Well, anyway, so we are now hitting resistance, and we could definitely come back up to this trend line right here of this channel, and see then for the downside. But in my opinion, since you want to use the width of a channel as a prediction to the downside, this would move back to these lows, and if we break this right here, then most likely you can see it has been supported in the past. If you go to 4 hour, then we can look at more time frames or at more data. Then most likely, I think, we could retest this area around 250. It would be quite expected in my opinion. But what is also important is that we actually made higher lows. Well, we didn't make big higher lows or significant higher lows, but we also made lower highs, and just also by a little bit. So this could be an indication that we do not reach quite there, or quite to 250, but that we actually could maybe find some sort of retrace at around 260 to 270 in this area. And I can draw something like that, maybe around like in this area, and I make this green, or come on, I make all my screen. Yeah, so maybe find support in this area, and this would also coincide with the width of this bear flag. So I think more the downside in the near future is likely. After that, well, I don't know, of course, but I think a rebound in this area, and in this area to 250 is quite likely, and actually quite expected. Yeah, well, as you might know, Tesla has been very choppy, but actually, if you want to trade it, then it's not too bad. You enter trades around 250 to 270, and exit trades around 3060 to 3080, 380 to 3060, yeah, whatever, yeah. Yeah, so actually quite tradable, and I actually should draw another trend line right here, or yeah, and yeah, so you can see we have also now broken this support line right here, so it has been quite important, and we have retested it now on the daily and of course on the hourly. If we move back up to this line, then we might, or then most likely we will retest this trend line of this channel, but then see further downside, in my opinion, on Tesla. And you can enter a trade, of course, after breaking 279, and I would exit the trade in this area, in this zone. Also, if we move down to 250, then you will still have quite nice gains. Like it would be, yeah, not too much actually, but like 4 to 6%. And yeah, well, this has been Tesla, and now ending it with Apple. Then yeah, we have this. I've talked about this in my latest video on Apple, that we have this gap right here, and most likely it will be filled. Well, it filled, but it did with a quite corrective pattern. Not too nice in my opinion. We though have made higher lows and higher highs, and we are now again. I mentioned this curving action right here, and you actually should do it like this. I think, I'm not quite sure, but you want to make it symmetrical, and like this and like this and like this. Yeah, I think this is right. So this would indicate, of course, that we move back down again, but curving price action is not too significant in any prediction, in my opinion. So I wouldn't look at it as very important. But anyway, we have moved quite correctively, in my opinion, and are now finding resistance at around like 258, and on the hourly hitting our moving averages, and on the daily we have, of course, much more room to go until we hit any moving average. So you actually want to look at the 4-hour and hourly, but still this is mostly consolidation mode, and after seeing such a bear rally, to see this kind of consolidation, I think this looks like a continuation pattern, and we would look to see more downside and break 241. And after that, I talked about this, and I don't know why my line isn't here right now, but look at this, and then 134 as our next target for support on Apple. And of course, I will be very cautious. I would enter a trade around below 140 and exited a trade around like 135, since this is quite important support. So yeah, we are, as you see, we're on the daily. We are now hitting a resistance of the 12th and 26th period moving averages, exponential moving averages. So still looks quite bearish. As you can see, price has been below the 12th for all the time of this bear run, and we are now calling between the 12th and the 26th. So this doesn't look too bullish in my opinion. And if we break up, then, well, we will look at the support right here. It would then most likely coincide with the 50 day moving average, since it moves down, and then we would expect most likely a retrace after it hits around like 161 or 165 or around this area. And I can draw a line right here. So this could look, or this could play out as an ascending triangle, and this would then look like maybe like this. It's not too nice since we actually made lower highs, so this more or less looks like a continuation pattern and just an equilibrium basically. But if we actually break to the upside, then I will look at this area around like 162, 163. Maybe it will coincide with this 50-day moving average then, but I think there isn't too much upside. Also, on the fundamental basis, Apple doesn't look too bullish. Well, in my latest video on Apple, I also mentioned that since fundamental news and so forth are mostly like 90% bearish on Apple, we could actually look for the bottom soon, since you want to be not in the masses, or you want to stay away from the psychology of them, and usually want to look at the other direction than the masses do, and most people do. So also you can see on the ADX